Good morning friends, today it's 9th of January 2025 and the technical outlook for Nifty and Bank Nifty futures for intraday and short-term time frame is as follows. Since last couple of weeks we have been saying that index remains under range with pressure. Pullback should be looked to reduce leverage bets, and we have seen that initially last week Nifty futures made the high of 24,314 before slipping down, and this week it has been under pressure. It's currently down almost 1.2% Nifty 50. In last session we have seen a sharp cut initially in the intraday. Nifty made a low of 23,593 before bouncing back towards 23,839 and ended the session almost flat, marginally in red, down minus 0.06% at 23,781. Today being the weekly expiry for Nifty 50, the OI data indicates range to slightly positive over and above 23,500 levels, while the strong resistance remains at around 24,000 mark. So we are expecting this broad range. Within this range, intraday downside will be capped over and above 23,580. So dips towards 23,580 and lower 23,400 can be looked for intraday trading long, keeping strict stop loss of 50 odd points, while intraday resistance will be at around 23,960 and 24,080, which can be looked for selling, keeping a stop of 50 odd points. If we talk about Bank Nifty futures, it also witnessed a sharp cut yesterday in intraday. First, it made a low of 49,625 levels before bouncing back and ended the session at 50,095 in red, down minus 0.63%. So overall, we have seen Bank Nifty witnessing a sharp cut in last 4 sessions from the highs of 51,928 to the lows of 49,625. Overall, the positional bias still remains range to down. As mentioned, 52,000, 52,500 remains the important resistance below which the bias will be range to down, while the short-term resistance remains at around 51,000, 51,500 below which again the bias remains upside capped, with a crucial support at around 49,500, 49,000 zone. As mentioned, since last almost 6 months, the major support at around 49,500 has played a vital role, holding up the fall of the index. Trading below 49,500, it can even retest the lows of 48,000, 47,500 in days to come. So 49,500 is important on the lower end in days to come, while 51,500 and finally 52,500 will be important on the higher end. The oscillators are not positive, it indicates range to downside bias, so we are not recommending any kind of aggressive longs in this space. Pullbacks can be looked to reduce leverage long bets, or either contra trading short bets can be looked in Bank Nifty on pullback towards resistance levels. For the day-to-day intraday players, the range can be 49,500 to 50,600. Dips towards 49,820 and 49,500 can be looked for trading longs, keeping a stop of 100 odd points, while pullback towards 50,450 and 50,650 can be looked for contra trading short bets, keeping a strict stop loss of not more than 100 odd points. As per the monthly OI data for 30th of Jan, Bank Nifty has maximum call build-up as around 52,000 strike, while the maximum put build-up is at around 50,000 strike. That indicates that 50,000 is still a very important and crucial level on a short to mid-term time frame. So that can be looked as a silver line. Trading below 50,000 mark, the bias will range to down, but holding over and above 50,000, some pullback can be expected as per the intraday charts and OI data. Overall, both Nifty as well as Bank Nifty need to sustain above the mentioned resistance levels in order to nullify the ongoing pessimism and negative outlook. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.